Yeah.
Great.
Recording in progress.
What's up here? Oh,
Hey, good morning, everybody.
Morning, Mike.
Let's not do it today, Gerardo.
all right.
All right. Happy Monday morning, everybody. Let's get rolling here. Gerardo, do you have the thing ready to go or?
Yeah.
Okay, let's try it again.
Recording stop. Recording in progress.
That's okay. That's okay. I'm gonna grab it. I'm gonna grab it. Let's get going here, everybody. All right. Welcome to Snipers Monday morning. What's the date? December the 12th. Christmas is approaching. Stock crypto and options trading has large potential rewards, but also large potential risk. You must be aware of the risks and be willing to accept them in order to invest in the stock, crypto, and options market. Do not trade with money you cannot afford to lose. This is neither an offer to buy, sell, or recommend a particular stock, crypto, or option. Let's hop into the markets. The first place I'm going to go, like I do every morning, is I go right into the CNBC site and I just get a general high-level feel for what is up in the markets. You know, I want to see what's going on with the overall markets, the futures are up higher. The Fed meets this week, as you know. By the way, let me show you this slide. We do have the Fed meeting tomorrow and Wednesday, and on Wednesday at 2 p.m., Fed Chair Powell will raise rates. Probably 50 basis points is what most think. Could be 75. Inflation still high. Consumer spending still high. The job market is still strong. So those things generally point to higher interest rate hikes. But I think we'll probably get a 50 basis point interest rate hike. And on Wednesday is the CPI report. So we've got a major inflationary report on the very day that Powell lifts rates. And then at 2:30, there's the conference. A lot of times the market doesn't move that much. And then after this guy starts speaking, the markets can move some 30, 40, 45 out 1 hour after 2 o'clock. Between 2 and 3 is generally where the moves start happening. So that's what's coming up. And I would imagine the markets will kind of hang out like deer in the headlights until Wednesday. And they're nudging slightly higher. We'll look at the actual futures here in a minute. Let me just do a quick refresh on CNBC. Rivian pauses plans to make electric vehicles in Europe with Mercedes-Benz. So I'm going to put on my list of stocks to look at. Here's my list here, everybody. Pinduoduo, a Chinese stock, Budweiser, and Rivian are candidates for trades today. Microsoft buys 4% stake in London Stock Exchange as part of a 10-year iCloud deal. All right, so Microsoft's working with the London Stock Exchange. Wells Fargo downgrades Qualcomm, says exposure to smartphone industry will hurt chip stocks. So I got to look at Qualcomm. I'm just building my little hit list here. I'll tell you how I found Pinduoduo and Bud here in a minute. And this is how I'm doing it. So stocks making the biggest moves pre-market: Horizon Therapeutics, Coupa, Rivian. Horizon Therapeutics, I don't remember the symbol for that one. Yeah, HZNP. Horizon Therapeutics, HZNP. Let's put that on our list. Coop Software. And you know, it's great here. You know, Snipers is all about news-backed direction, right? Looking for stocks that move hard, technically interesting, and then backed by news. And that's why I like to come here and look at news. Some people MasterCard says inflation has peaked, but it's not returning to pre-COVID levels in 2023. So it's saying that inflation is going to stay hot for a while. They're going to be right about that. unless they're wrong about that. We shall see. Let's see. Okay, so Thoma Bravo is buying Coupa Software for 615. So if you look at the stock chart, I'm sorry, I have to do it. I was going to wait, but they're for 6.15 billion. So that's brought the software up, the stock up, sort of channeling sideways. Don't see a lot of opportunity there. All right, so there's not a whole lot of news going on for today. Let's go to Bloomberg, and this is their free website, and you can see just some pretty much similar news that you see over there on the CNBC site. I don't see any big stocks being illustrated. I like to go to the 5 things you need to start the week. In fact, Bloomberg actually has a email service where they'll send you open and closing reports. So here's the Fed focus. As I just mentioned, everything I just said is in here. The Fed has been pushing the message that the policy rate is likely to remain at its peak rate for a while. That is part of the message that the market has consistently not gotten. The estimates of the degree to which inflation will come down are too optimistic. All right, so inflation isn't going to drop as quickly as people think. At least that's what the industry pundits are saying. And I'm not seeing a lot there. COVID in China. This was what popped up LVS and FUTU last week. Is the COVID policy in China that they unexpectedly unwound their pandemic rules last week has driven a lot of Chinese companies up. And one of them on my list today is Pinduoduo, PDD, which we might be able to find a trade on today. All right, so that's the general market news for the week, the major announcements. Fed speaks at 11 about 1- and 5-year inflation expectations that could move the market if it's not pleasing to the community. The CPI, actually, the CPI comes out tomorrow. This core consumer price index comes out tomorrow. The one of the most important inflationary reports comes out tomorrow. It's expected to be 0.4%. I would imagine it'd be probably about the same, maybe a little lower. If it's lower, we could get a pop up in the market. Then, of course, Fed Chair Powell speaks on Wednesday after raising the rates at 2 p.m. He'll speak at 2:30. And then we got jobless claims coming out on Thursday, retail sales on Thursday, manufacturing indexes as well, and then the manufacturing producers management index. So a lot of inflationary reports are coming out towards the end of the week. So we could have a bit of a volatile week this week. So let's talk a little bit about what's going on in the overall markets. Now, what I normally do on Snipers is, because the markets aren't open for another 22 minutes, I tend to go through the futures. All right, let me give you this futures list here. Where have I got it? Here we go. Right. I don't have it on this presentation. You've seen them enough, though. Let's go through the futures. I'm going to start with the /ES. What is the S&P 500 doing? Let's take a look. Zooming in a little bit. Yeah, as we came down pretty hard beginning of last week, bounced a little bit. We're sideways. We're under 4,000, a key level. I would expect us to stay in this range until Tuesday at 2:30. I don't expect there to be solid moves one way or the other. We do have the CPI tomorrow, which could move in the morning at 8:30 Eastern time. So look for a potential move there. But man, we're in a bit of a holding pattern despite this Powell-inspired gap that we had here a couple of weeks ago. It failed. We've set lower lows and sort of heading sideways, but still below 4,000 for the last 1, 2, 3, 4, 5 days. So I got to say, I don't know. I don't have a super strong opinion about where the markets are going. And I'd say for the first time since COVID hit, I'm actually leaning more on bullish trades. You know, Ulta is another stock that I published in one of the publications I write. And, you know, LVS and FUTU, all of those stocks are setting new highs, annual highs, I should say. And so there is some bullishness in the market. There's also equally as much bearishness So man, I would say though, one thing, volatility, it should be expected either up or down from here. So here, you heard it here first. The markets are either going to go up or they're going to go down from here. You heard that right here on Snipers. Let's go to the NASDAQ. Same similar pattern. And we're going to see that similar pattern across the board. This is the 50-day average, providing some support. So vacillation, channel bound on the NASDAQ. Let's go to the diamonds, not the diamonds, the Dow Jones Industrial Average /YM, and another similar pattern that we saw in the other two indices. Again, expect more of this until Wednesday. Perhaps tomorrow we'll get a run. Russell 2000, the smallest cap stocks, the 2,000 smallest market cap stocks in the U.S. stock market. And we are vacillating sideways between 1,900 and let's call it 1,800, 1775, right about in here. So we got some choppy sideways action there. Those are the major markets. Let me take a look at oil, which has been in a downtrend, an obvious downtrend. Oil is dropping, and so are the likes of Chevron and other oil companies. The USO, of course, follows suit. USO, the ETF that tracks oil, is heading down. I tell you, oil is one of those tricky instruments or tricky commodities to forecast because it's got so many influences, including OPEC, which at a flip of a switch can increase or decrease supply and impact the price of oil. But all that said, the downtrend is decided. So bearish on oil makes some sense right now. We'll look at our open positions. Chevron's one of them. Let's see. Let's take a look at gold. Gold is down a little bit, but now still above its 200-day average. We're going to open just below it. It looks like right at it, but we've had 2 days above. We're vacillating on either side of the 200-day average. And of course, the price of gold is at the moment primarily influenced by the US dollar. So as the US dollar drops in strength, then gold rises in price. Now, where's UUP maybe going from here? Two things suggest up. How many days have we bounced on the 200? We bounced here. 1, 2, 3, 4, 5, 6, 7. 7 days of either bouncing or being slightly above the 200. That's a lot of support being built there or confirmed there. And with rising interest rates, that tends to lift the price of the US dollar up. So a reasonable forecast from here on UUP would be up. So, and if it breaks below the 200, then we're going to perhaps see a further downside in the UUP. So this is really a weird time to trade, everybody. It's like the markets are kind of deer in the headlights, US dollars dropping in the face of rising interest rates, which is a little weird. You know, it just isn't a solid, no-brainer direction on virtually anything at the moment. Let's look at bonds. Bonds are rising. Now, I know there's a lot of repeating that goes on here, and I'm going to repeat this again. When the interest rates are lifted, bonds drop until people start buying them because they're paying more money than they did this time last year. And bonds are certainly in an uptrend. Rising interest rates on Wednesday tend to drop bonds. So a bit of a mixed signal about which way bonds might be going next. What else did I want to show you? Let's look at the VIX futures. The VIX futures have dropped with this recent bullish run in the market. They've popped back up with a recent correction. The VIX is hanging out right where it is, right where it closed, right where the futures closed on Saturday. They are pretty much there today. So once again, I would expect the VIX to stay flat, at least for the near term. Let's pull up a VIX chart and see what it looks like. Whoa. That I did not see. So the VIX has actually popped up. That's weird. That's weird. VIX futures are not reflecting it. That is interesting. Okay, that's weird. Now, why would the VIX rise when the S&P 500 also rose, and not just rose, but spiked? So that's 1212. That's today. That's the VIX reading today. And that is a spike up in the VIX. Warning flag, warning, Will Robinson. Let's keep an eye on the VIX from here. The VIX ain't there for no reason. What causes the VIX to rise? Well, ultimately, it's the amount of implied volatility in the options. It's the price of the options being lifted, and that lift of price implying volatility. That's where implied volatility comes from. It's derived from price. So why would the price of options on average be lifted? It's because of expectation of volatility in the markets. So if I was to surmise, I would say market makers are nervous about the CPI tomorrow and the Fed on Wednesday, speaking on Wednesday. So let's see what happens. So it gives me a little bit of something to be wary of, or be enthusiastic about in my case. So let's see. That's very, very interesting. All right. And by the way, if you have any questions, go ahead and pop them up in the chat, and we'll allow you to speak if you like. But let's take a look at our portfolio. And one of them I want to talk to you about right now is Chevron. Okay, so we have the only two losing trades that we currently have on the board are Chevron and Northrop Grumman. These were long-term credit spreads. We have a third long-term, well, they started off as long-term credit spreads. We also have a long-term credit spread. That's now, all of these are now iron condors. They all started off as iron condors or credit spreads. And now we have a nice little profit on this iron condor with a super high probability profit. Let's go through each of these for a sec here. Here's Chevron. Remember last week we were up here. Let's see, 1, 2, 3, 4, 5. Here, the last time, last Monday we got together, Chevron was up here, and we were losing, I don't know, 370, something like that. And now Chevron has come down hard, and now we're only down in the trade $279. We were down 372 during the life of the trade. So this batten down the hatches adjustment was to contract the upper spread and then complete a butterfly. That's all I did here. And now we're sitting with this. So the question becomes, of course, and always, what do we do? We only have 7 days. It's actually 5 days. This expires on Friday. Time decay is now working for us all the way up to this point here. So as time happens above this point, this inflection point, time is working for us. Delta is working either against us or for us, depending on where the stock goes. If it bounces today, we could find ourselves in the body of this butterfly and maybe lose even less. So I am not focused at all on making money on this trade. My focus, as always, is to lose as little as possible. Now, when you finally take that into your heart and you stand there and you trade from there, your trading will reach a whole nother level, and so will your psychology, quite frankly. So then in order to figure out what to do, you start deriving a directional prognosis. Well, oil's down. It's even down today, is it not? Now, oil's up a little bit today. Oil is up. The oil futures are bouncing off 70. Okay, so there's some information. So if oil bounces off 70, look at this doji pattern here that we hit 70 the last open, and then we're up, little hammer pattern to start the day. So we'll see oil sort of bounce maybe this morning a little bit, at least on the open. And if we look at Chevron, Chevron is up a little bit. Chevron closed at 168 and now it's at, let's call it 169. So Chevron seems to be bouncing a little bit this morning. So for me, with a slight bounce this morning, and by the way, today is the 12th. Okay, so this is Friday's market data. And we were, as you can see up here, we're down 279. And then we got 2 days of time decay. Today is the 12th. So today, that would be the 11th, Sunday, right there, the blue line. See that, 211. So we're going to have a bit, we should open up somewhere in this range here, which would be a loss of about 250 or so. So I think this is a hold, at least for today. For today, it's a hold. There's a good chance, at least for today, and these trades become that. They become a day-by-day proposition. So my directional prognosis is now that we're going to get a slight bounce. Well, we will on the open, a slight bounce. So the stock will rise at the open, and I'm going to make $1.75 on that bounce. And then I've got 2 days of theta from Saturday and Sunday. Let's call that 12, 13 and a half, 13.5. Let's call it $15 of recovery that we should see in the morning. All right. So as long as the stock is between these 2 inflection points, and delta doesn't start getting big, which it will, by the way, as these lines collapse into towards profit. There's a little bit of profit. As the lines collapse this way with time coming out, the theta will get, the delta will get bigger, both positive and negative, and so will the gamma. So it'll be interesting to see what this looks like at the top of the hour. But this is a day-by-day thing, everybody. It's a day-by-day proposition. Now, one move you could do is this. Now, this is as of Friday. Today, it'll be better. But what you could do, if you go back to the originating trade, we have a 165. There's your 165. Here's our bottom call spread that we added on 10/21. All right, so this call spread is a 165, 170 long call spread. It's a bullish spread. All right, so this bullish spread, should the stock drop, will work against us. So in the event that Chevron begins to fall from here, then you could say, all right, I'm going to pull off the spread that's not working for me, which is the bullish one. Stock drops, so we're losing more money. You could shut down, rip that wing off, and leave yourself with a high risk trade that if the stock does rebound, you're going to get hurt. You might lose $627. To me, at this stage, not a good idea. Not a good idea. I don't want to add a lot more risk to the trade, 627 if I do that, than here where I only have $405 of risk. This is our best friend. All right, when we started the trade on 9/23, we had $800 of risk. Okay, so when we adjusted this thing, let's see what we were down. We adjusted on 10/21. Now on 10/21, you could have gotten out of the trade for a $365 loss. We are currently at a loss of $279. So that's obviously better. And it looks like it's going to get even better with Chevron bouncing a little bit. Let's hope it hangs out in this range here. I did say hope. Let's see if it hangs out in this range. If it does, I'm going to be looking to pull this thing off as delta gets bigger and bigger, and so does gamma. So that's a nice little recovery from a simple process of battening down the hatches. Okay. Now let's go through the other long-termers here. This is CRE regional banks. This one's looking gorgeous. Not much we need to do here. This thing expires on Friday. you know, let's look at the options. The options, all the bid prices of the calls 0, the bid prices of the puts 1. You could certainly just shut the whole thing down for pennies if you like, or I would say safely let this expire by Friday. This backyard is huge, and banks are going to have to drop hard in order to get in trouble here. So that one is looks destined. Let's see the probability of profit. I bet it's 100%. Is it? 97%. Today it should be 100. Let's see what CRE is doing pre-market here. Yeah, it's hanging out at 60. It's right around a little higher. Yeah, it's right around 60. It's in the 60 range. Strong support here at 59 or so. So that one looks really nice. And then the other one we have is Northrop. Remember last Monday, I said, well, you know, let's wait. Northrop, this was last week. This time last week, Northrop was threatening to bust above 550. That resistance level held here. It held here as well. Looks like this one is in pretty good shape, at least for now. If the stock does in fact retrace from here, then we're going to be in really good shape for a nice little profit, 13% potential profit. If it does start rising above 50, now this is really important, everybody. Use your resistance levels, lean on them, use them as triggers. I'm not going to do anything up here on the calls unless 550 is breached. Consistent with what I said on Monday, only do something up here when this resistance level is breached, and it hasn't been. Doesn't look like it's going to be, at least for the foreseeable future. All right, so those 3 trades are looking pretty. By the way, look, Northrop was down 522 at one point, and now we're only down $215 on Northrop. Let's look at FUTU, which is a trade we put on last Monday. FUTU we found using the high-low ranker, and FUTU had hit a 52-week high. Here, and then again on Friday. We got a short strike right around 60. We got a nice little probability of profit on this one of 88.8% by Friday. Our theta was $8 on Friday, so $16.26 got added to our profit by the open, I would imagine. Something in that neighborhood, 16 bucks or so of additional profit was realized with 2 free days of time decay. Saturday, Sunday, we made some money on theta while we went out and did our weekend activities. So that one looks real nice. How do you handle this one? Well, you put a GTC order in to buy this thing back for 5 cents, 4.8 cents. We can't do that, so round it up to 5 cents GTC. Or if the stock cracks and closes below the break even right here, which happens to be 59.52, an absolute number, should the stock close below 59.52 anytime between now and Friday, close it down for a managed, mitigated loss. That is the basic credit spread world. And if you do that, because of the high probability of profit that we've enjoyed, by the way, I haven't seen one losing sniper credit spread since we started. And somebody can refresh my memory. I don't remember one single losing sniper credit spread that we've had since we started. So I think probability of profit on this one is exceptionally high, 88 point something percent to be precise, statistically speaking. And then we have LVS, which is Las Vegas Sands Casino, Resort Casino. And by the way, Las Vegas Sands has casinos in a casino, at least in Macau, which is suburb of China, of Hong Kong, which is now Chinese. And this is one of the stocks has enjoyed a bounce given the reduction in lockdowns in China, COVID lockdowns. So this one looks really good for a profit by Friday. We had $20 of time decay that we realized over the weekend. We should have something like $32 of profit in this one as the market opens again today. Now, look, again, if you can buy this back for 2 cents, having sold it for 20, GTC, buy it back for 2 cents and capture most of your 25% profit over a 14-day trade. If the stock closes below the downside break even of 44.80, which is 20 cents below support at 45, by the way, if that happens, get out. You're going to be in here maybe $100 loss range. Mitigate the losses. Don't worry about adjusting these. You don't have to work so hard on these. There's not much you can do during the week of expiration on adjusting anyway. So just follow the rules. Follow the rules. Absolve yourself of any responsibility. It's not your fault. The rules are doing it. Let the rules do what rules do. Okay, let's pause for a sec to see if there's any questions or comments. You can raise your hand if you like. Andrew goes, oh my, it's POW week. Yes, it is. Yes, it is. Why a slight bounce in what, Johnny?
The first thing you were talking about, CVX, I think.
Yeah, why is it bouncing? It's because oil's bouncing. Yeah, that's a good question. Because oil's bouncing this morning. The markets are now open. Because oil has bounced, little hammer pattern there. And a doji on Friday. I see a bounce happening in oil, and Chevron's simply following the bounce, as are most oil companies at the moment, I would expect. And there's your little slight bounce on Chevron as I speak. Now there's a lot of volume on Friday, so I'm still, my downside on my projection is downside from the chart. Looking at Chevron, big down day, a slight bounce, another down day. That's an up day, but still a down bar, another down bar. The volume on Friday was well above average, which points to further downside, but we'll have to give this some time. So on the Chevron trade, give it a day or two, and I'm not really interested in ripping off the wing at this late stage unless Chevron's all the way down here. Don't expect that. We got strong support at the 200. So day by day on Chevron. Any other questions anybody might have at the moment? I'm very excited about our sniper credits. All right. So we're now going to do a little bit of Tom's tools. So this is a chart of this is a back-tested chart of Thermo Fisher Scientific, and you can see here that the stock is quite volatile. It moves, but if you take a closer look, you'll discover that stocks move in what I'm going to call directional currents. You can call them channels as well. That's the typical name we use for this phenomenon. And and by the way, you can see channels at if you climb out 10,000 feet, you can see different channels. If you zoom in, you can find channels within channels. So check this out. There's a sideways channel in this part of the stock chart. There's also a sideways channel in this part of the stock chart where the stock is bouncing off resistance and support and resistance and support. It breaks resistance and then starts rising and sets another resistance level. Notice right at round numbers, that's typical. Resistance, resistance, support right at a round number as well, 220. All right, so support and resistance trumps every single thing you can put on a chart. And volume comes second. Or you could say volume's first. They're both immensely powerful. All right, so there's some sideways channels in this, from looking at this entire year of data, but you can also see other channels. There's a bullish channel there where a stock runs up in a channel support. We're just connecting these lows, finding a nice support channel. And then we have a resistance channel up here connecting these two highs. That generates a bullish channel there. Now, the thing about these channels is that this stock tends to stay in these channels until it doesn't. Like here, it broke below this lower channel and then started dropping. Here, and I could build a channel there, I just didn't do it. But you're going to see these channels all over the place in a stock chart. Now, fortunately, the tools that we use to find opportunities, Tom's Tools has something called Channel Finder. So the whole idea of Channel Finder is to find stocks that are in channels, providing a higher probability of directional being correct or being right on direction. So, and again, you can trade these channels at different time frames. So on sideways channels, and I'm going to show you how to find these in a minute. Sideways channels, you can use at the money, calendar spreads, butterflies, and condors, depending on the IV. All right. Typically, if a stock is low and depressed, the IV might be high, and you might use butterflies. If the IV is high, use butterflies. If the IV is low, use calendar spreads. Really, really important point. You may want to write that down. But when IV is high, don't use a calendar spread. When IV is high, use a butterfly. If IV is low, use a calendar. It all has to do with Vega. And condors you can use in any environment, really. All right, so that's how you could choose to trade these if you like. And then if you see up channels like I've demonstrated here, I'm going to show you how to find them. If you have an up channel, then you could use long calls. You could use put credit spreads, bull put spreads are called sometimes, or even out of the money butterflies, or yes, even broken wing butterflies. All right, so there's some up channels, directional trades. Now these trends continue until they stop. The trend is your friend, except at the end. The trend is your friend. This hasn't ended in this chart. Now there's also within this entire chart, there's also down channels. All right. So for down channels, of course, buying a put makes a lot of sense. You could sell an out of the money call credit spread, or even at the money if you like. And then out of the money calendars, put calendars to be precise. Let me do a quick chat poll here. Why would I use an out of the money calendar? What's the benefit versus a butterfly? Why not a butterfly, and why a calendar if I have a down prognosis? What is the rationale for using a calendar spread in the event the stock drops? Any ideas? What am I after? What am I trying to profit on? IV, correct, John. IV will rise in a down market typically. IV drops when stocks go up. IV rises when the stock price drops, typically, and calendar spreads actually profit from rising IV. Butterflies actually lose a little bit of money, at least temporarily, in the event IV rises. So that's a bit of a roadmap for trading channels. Now, I'm going to take you into the ranker here in a minute. We're going to start playing with it. All right, so this is the channel finder ranker, and it allows you to find sideways channels, sideways and up, sideways and down, up, down, those that are gyrating for 40 days, meaning they're going nowhere, and then even more narrow channels, 5% channel width over different time frames, with 3 to 6 weeks, less than, right around 2 weeks, give or take, and then even less than 10 days. Now, what I want you to also do is consider using this list here, the penny plus weekly. The reason is that those options have tighter slippage. Typically, the stock prices are elevated. They're not $1.50, $3 stocks. They're higher price stocks, which we certainly need if we're bearish. We need the room for the stock to drop. And the slippage is tight. And there's typically weekly options in this list. A lot of these have weekly options, meaning that there's option expirations every week versus once a month. So it's a really important that you take that list. Don't mess around with all optionable stocks and indices. All right. And so when you do this, you select the type of the penny plus weekly, the type of channel you want, then you click the search button. Now here's a tip. Set a tighter channel when you use this tool. When you go into the wizard criteria of the channel, you click show, and then I want you to do this right here. This is normally 999, and I want you to set it at 5, and that will create tighter channels. So let's go using the channel searcher. I'm going to hop right into Tom's tools. I will go into stocks, stock rankers, channel finder. If you have questions about how this amazing piece of software goes out and detects channels, you could always hit the help button here and you'll see all that you want, including the formulas in some cases used to derive. There's a formula. Write that one down. Kidding. You don't need that. These guys think in formulas, so oftentimes the help files will contain formulas, like here, channel width. But this channel finder does a lot. Hit the show button here and you'll see. If you want to dig in, unfortunately we have wizards, so we don't have to worry about all of these. But you can change the start days, the stop days, the direction, the channel width, percent from center line. Now notice it's 999 here, and that's too wide. I'm going to make it 5. That's a trick I learned by playing with the scanner for a handful of hours on Sunday to prep for this. So we have a 5% max channel. Don't worry about the rest of it. Now, the thing is as soon as you hit a wizard setting, let's say we're going to look for bullish trades at the moment. Okay, I can set best up channel. And then if I change this to 5, I'll have to, and then I'm going to go look at down channels. The minute I click down channels, it resets it to 999. So this is something that you have to do with every time you change the wizard setting. So let's look for up for the moment. I'm going to change that to 5. Let's get rid of the detail in a minute. You can look for a longer term or a shorter term channel. I'm going to go for 21 to 45 days. I'm going to go after penny plus weekly stock list, and then I'm going to hit search. And now all this math is applied, and check out some of these stocks. They're awesome. Look at ABC. What? Now what the software is going to do is give you different channels. And what's cool about this one is Amerisource Bergen has been in a longer term. The first trading channel is 58 days and the second 30. And both of these channels overlap, pointing to an extraordinarily tight bullish channel in this stock. Ferrari. Now this one is the longer term channel doesn't slope us up as much, but the 45-day channel, this one does. So this is a good candidate for a directional trade. Now we are at the high of the top of this channel here. That could be resistance. So you've got to still apply further directional analysis, but these are nice bullish candidates. Mendeley's here. Same general story. The 51-day channel, the pink channel, is going up. Well, how about Ulta Cosmetics? Baby. Bullish channel here, but based on the way this channel is calculated, using this high here and those lows there, we're approaching what might be a resistance level at the top of that channel. Now, you've probably heard of Darknet or Alpha 9, and Alpha 9 uses these channel collisions, 3 different channels, and when they all collide at a certain point, that's a major resistance level. Let's look at some of these other ones here, just a few more. Okay, here's Procter & Gamble. Nice. Now, Procter & Gamble has just breached 150. It's in a solid 46-day trend here. But here's a case of what I was saying before. The long-term channel or short-term channel up, the medium-term channel sideways. The resistance level is here, and then the resistance level for this even longer-term channel is here. So when these channels all start to overlap, they can serve as a resistance level. All right, so I can go through the rest of these. I'm going to check Pfizer here real quick. Yeah, that's a good looking stock as well. Pfizer is right at resistance around 53. We are at the top end of this channel here. A breach above it, though, a close above 53 in this case would mean that the stock has now breached this upper channel here and has further upside. So what we're doing here is we're looking at, sort of like currents. We got a big current and a medium current and a smaller current. So does this small current here have enough power to drive the stock up on Pfizer? Okay, let's do the bearish side. Best down channel. Click show. Change this to 5. And then let's hit search. See if we can see some bears, which I prefer. iRobot. Yeah, I mean, this 89-day channel, obviously some news happened. That looks like a buyout of some sort, because the stock went really sideways right at 60 for a bit and then started drifting down. And I'd have to do some research, but this channel here is bearish for sure. And this one is a prime example of what could be a darknet buy, because the bottom channel here, the longer term channel, support level there, the support level of the midterm channel, and the support level of the shorter term channel are all coinciding right there. That very well could be a support level and a bounce. Let's take a quick look just for fun, AMLP, to see what it's doing as I speak. Yeah, it's bouncing. It's bouncing. We could see a bounce there on AMLP. All right, so there's the other thing you can do here. Let's look for up channels as well, and I'm going to do 11 to 20 days. We can search for even shorter term channels over an 11 to 20 day channel, and some of the same ones come up as before. ABC is obviously in a nice bullish trend. It did drop on Friday. Okay, so those are candidates. Let's just say for now, I'm going to save these 59 stocks that are all in some degree of an up channel and save them in my stock list. Now, just like last week, once you have a bullish list of stocks, then you can come into searchers and do any number of things, calls and puts. What I tend to do here is I want to say, I want to find the call options on this list of stocks that has the lowest percent to double. Let's hit search and see what's out there. I'm not going to take any calls up until the Fed announcement. It's a little risky. We don't know where the Fed is going to spur the markets to next.
We got to put my stock list.
Oh yeah, thank you. Thanks, Larry. Are you back from South Beach?
I am. I'm headed to Costa Rica though.
Oh, nice. That's what I'm talking about. So all of these are in some level of an uptrend. And what's really cool about this scanner is if you're a call trader, it gives you the percent to double. So what this 2.21% means is that for this Jan 27 call option to double its money, the stock only needs to go up 2.2%. What? Are you serious? Let's check it out. So here's your call risk graph. I don't see the stock really in a decided bullish trend. Maybe from here to here, we need to zoom in, but it doesn't move very much. 2%, which is what, $3 up, and you've doubled your money in this one. Slippage is a little wide on this. I wouldn't do it because it's 15 cents wide. So you can play with that if you like, if you're a call or put trader. Here's another one that's in a nice little uptrend on corporate bonds, HYG, call option there. If you're right and the stock moves up 3%, oops, sorry, HYG, the stock moves up 3.48%, which is not far at all, then you'll double your money on that. Other searchers include, I do like, where is it? Vertical spreads, as we mentioned last week, have a built-in moving average cross selection that helps to confirm bullish market direction. And there aren't any that have recently had a 10-16 short long moving average crossover. Now, of course, what we like to do in snipers a lot is put credit spreads on bullish stocks. So I'm going to go to put credit spreads, set my default parameters to short term, and then go to my stock list right here. There it is. And hit search. Let's see if there's any decent credit spreads on the list here. Philip Morris, Verizon. It's Altria now, but let's take a look at Verizon. These probabilities of profit aren't high enough for me. I like 80. So I'm not super excited about these. Verizon, yeah, maybe an uptrend from here to here, but man, it's going sideways. How about Philip Morris? Much more interesting on Philip Morris. We have resistance up here at 104. See that? Resistance. We breached it a few days ago, and then we've fallen back. But Philip Morris has taken a really strong run up. If I go into stock charts here, let's go into a live chart. I want to see what it's doing now. As I speak, what's Philip Morris doing? It's hanging out here. It's vacillating in this range, pretty much within the range of this big bullish bar there. But we've had three of them, a bounce off the 200-day average, and then boom, that there, the last time we were that high was, let's see, that's June of this year. So that's what, a 6-month high right there. So interesting. Of course, I would check news. I always like to do that. Let's go back to this bounce here, which is 1130, and then I can start looking to see what news has propelled the stock up. Goldman Sachs lifts profit target, price target on Philip Morris to 95 from 85 after completing Swedish match tender offer. All right, without digging into that news, that's interesting. Philip Morris also pays a very nice dividend of $1.27 a share, which is extraordinarily healthy. That's a big dividend. So that was announced on 12/8, which is right in here somewhere. So it bounced on the dividend announcement. Payable January 11th. So that's a nice dividend. That's really all the news, though. I'm not super excited about the news, but if I was interested in this one, I am. Technically speaking, I am. The dividend's nice, and the pay date is Jan 11, which is what, a month away. So that could incent some buyers to come in and propel the stock higher. So then what I would do is go back to the trade for Philip Morris. 64% chance to make 45%. I don't want 45. I do want 45%, but I want more probability of profit. Let's grab this trade here, which is a 1-month trade. It's a little bit longer than I like, but let's look at this one and maybe let's try out a shorter term one and compare them. So my next question is, where do I feel good about selling? Well, first off, I feel good that 102, 101 right here, let's call it 102, is a support level. That's dancing on that level at the moment, right at 102. I'd be interested in 100, but certainly 98 would be of interest to me for a 1-month trade. So what I'm going to do now then is let's duplicate this trade and let's drop the short strike down to 98. And let's give ourselves a 2-point spread so we can contract the risk if we decide to do that. That's not bad, everybody. That's not bad at all. We're getting, let me hit the risk graph button again to get rid of the decimals. So we're going to make 22.7% on this one, which is not quite 1 percentage point per day of the life of the trade. So what we'd like to see is 28% right here to be at least as high as the number of days in the trade, 1% a day. Here's the problem with this one, though. If you look at slippage, it's gargantuan. All right. The distance between the bid and the ask spread is 30 cents. 10% slippage on this one would be 12.5 cents. So one way to figure out what 10% slippage is, our limit, is to take the ask price and move the decimal point over one to the left. So that would be 8% here. And we've got 8 cents, actually, 8 cents. And we've got a good 15 cents of slippage in this option here. That's 20%. That's not going to work. Here it's 30 cents and the slippage should be 12.5 cents. So heck no, not doing that one. Slippage is average 25%. Nope, no thank you. So then let's go shorter term. Maybe the slippage is not as wide short term. Let's go to December 23. I doubt we're going to get a lot of credit. Well, not bad though. Look at that. What's the slippage? Still wide. Slippage is too wide. Not a whole lot of open interest. Surprisingly, these options just don't have a lot of open interest. So with all that said, we're not going to trade it. There's too much slippage in those options. All right, and then we got Verizon. I've looked at corporate bonds. Not super excited about selling puts on corporate bonds in a rising interest rate environment, although the trend is up. It's not, the stars aren't aligned there. Okay, so I don't see anything there. I would continue this process and for the bears, but it is another way to get high probability trades or find trades at least in a directional pattern. All right, now in 3 minutes, Tom's Tools opens up. We get the latest data, but what I'm going to do live in Thinkorswim is go to my top 10, and I like losses. This is ambulance chasing, plain and simple. Let's find the biggest train wrecks. Yeah. This is like this gets me excited. This is what I like. Why did this stock just tank? And I don't see any news for, let's see, Brookfield Insurance completes special distribution. There's some bad news there, but it's not earnings related. It's not it's clean return of capital. So they gave money back to some of their shareholders. And for that reason, the stock tanked. I don't know much about direction after that. Look at this one on A to set. Let's check the options. No options until Jan 23. Let me just check the slippage. Slippage is gargantuan. So that one, a lot of these don't have a lot of liquidity. So it's probably best before you get too excited to just check the slippage. And look, 5 cents by 390. No, thank you. I don't see any big names in here. Let's do the top 10 losses on the New York Stock Exchange. Bam. Bam has dropped. Slippage is not bad. Let's see what the stock's done. That's either the same company or related to the other. All right, so I'm not seeing a lot of stuff there at the moment. Now, here's the stocks I was looking at pre-market. Pinduoduo. I found this in one of the other scanners this morning. I was just looking around for opportunities. But check out this Chinese company, Pinduoduo. That right there is a 52-week high. If not, let's see. Is it a max? Let's do a max chart here. So the last time the stock was this high was back here in November 21. So that's an annual high. We're at an annual high territory on this stock. As a Chinese company, it's benefiting from the relaxation of lockdowns. So this is a really nice bullish opportunity. I could sell put spread underneath this one. The question becomes where? Let's get a bit more data. We'll go a little bit long today because I did the education piece. It went longer than I wanted or I expected. 80. You see 80 right here? I'm just looking at support, prior support resistance, and I would do an 80 on this one. I would sell an 80 put on this one. So let's just see what that looks like in Tom's tools. Credit spreads, Pinduoduo, short-term, search. What do we got? Nothing came up. Probably because of slippage, but let's check. We now have live data for today. Let's try a 18-day trade on Pinduoduo. Let's say, no, 11 would be the week from Friday. Let's try to do a 2-week trade on Pinduoduo at 80. And I see decent amount of credit there. So this is opening prices, risk graph. Almost an 80% probability of profit, statistically speaking. It does have the winds of Chinese policy, COVID policy at its back. It's going to give us a 28% return in 11 days. So guess what I'm going to do now? I'm going to drop it perhaps a little bit more. Let's check the slippage out real quick. Slippage is 14 cents there. That's good. 17 cents would be max for 10%. Here, 15 cents. And our slippage is 22 cents. So that option doesn't have enough liquidity in it. It's too much slippage on this option down here, the one we're buying. But let's see what the slippage is further down. I want less than 28%, maybe 20%. So I'm going to drop it a bit further. Back to the chart here. Let's see. Just looking at short-term resistance. Now 70 would be great, but I doubt there's anything there. What about 75? 75. Let's see what that looks like. I'm going to go tight to get max credit on this. Yeah, not enough money down there. Let's check live what the Pinduoduo options are going for. Okay, so I want to do options that expire December 23rd. My God, Christmas is 2 weeks away. I gotta go shopping. I'm checking slippage here. One slippage is good at 80 here. It's actually 15 cents now live right here. You see that 122 by 137? That's 14 cents, which is right around 10%. So that's becoming more interesting now. The slippage has tightened from the open. And now what I'll do, since the slippage is now normalized, then what I'll do is go vertical. And we can look at live. I can compare them very easily. These are 1-point spreads. And if I sold the 80, let's see, we get 23 cents there. Dropping at 19 cents, 78, we can get 16 cents. 77, 14 cents. 75, 10 cents. 10 cents on that'd be 11%. Let's go for 80. That's 21 cents. Yeah, I like the 80 now. So this is, the slippage is tighter. Let's go back to the risk graph. If I was able to get, well, it says 21 cent credit there, and it's 22 cents there. That's 28%. Probability of profit, 80%. It's a little, you know, it's weird. It's like I look at that 28% and I'm like, well, I'd rather make 20% by dropping it. So for me to make 20%, I would, let's see, 20 cents, whatever that is, 20.80, maybe 15 cents. Let's try it here. If I sold for 15 cents, both legs, the credit spread for a net 15-cent credit, that's going to generate 17%. So I'm going to look for 15 cents credit here. Looks like I'll get it at 77. Yeah, 77. I know I'm kind of talking a lot. I'm just speaking out loud. But if I get I can get almost 15 cents, perhaps 14 cents at 77. If I get 14 cents here, I got to change my strikes though. Those strikes are 77.76. So I'm dropping it. For the sake of probability, I'm dropping it. 77, 76. Risk graph.
You had 777 in there, Mike.
Oh yeah, I did. Thank you. Let's take that one off risk graph. And it's giving me, let's say 14 here. I'm just going to brute force the price right into the legs here. 14 cents credit, giving me 16% over 11 days with a probability of profit of 87.2%. Yeah, I'll take it. That's a good deal. 86, I could do 5 of these. 6 to get me close to 500. 6 times 86 is probably a little higher. Let's just do 5. Risk graph. All right. $70 on 430. 16% with high probability of profit. Let's do 5 here. And confirm and send. Send. I'm not going to go chasing this one. Let that sit there for a bit. This today, if it doesn't fill, mid price is at 14.5 cents. Let's let that go. I have these closing orders on LVS and FUTU, consistent with the rules I gave you, and we're still a bit of a distance away on LVS as we are FUTU. So let's take a look at those stocks. What I can now do, because the software is now time-stamped for this morning, hit the bottom go button. I'm going to do another calculation. And we're losing less on Chevron. We're losing less on Northrop. Cree is in good shape. FUTU is in good shape. FUTU must have come down a bit today. Let's see. Nothing to worry about. Just follow the rules. Let it do what it's going to do. And let's just take a look at the risk graph on Chevron real quick. Yeah, that's nice. See the IV, the theta is now $13 a day. So as long as it hangs out of here, theta is going to be working for us. Looks like Chevron is testing support. We'll see what it does by the end of the day. All right, so I'll let this trade on Pinduoduo rest out there. Looks like I just got filled on it. I did for 14 cents. So I'm going to save this in Snipers Live, and then I'll post this on the Sniper board, the Sniper Forum. If you want to grab it, I'll give you the risk graph link and you can play with Pinduoduo. Before I wrap though, let me show you a couple more things. Stocks I was looking at, Budweiser. We were talking about sin stocks a while ago. Budweiser is in a very strong bullish pattern right after its earnings. People like to drink beer when things are going rough. Inflation, people are buying beer and other spirits. So Bud's rising. Rivian, bad news in Europe. I like this one for a broken wing. And by the way, those channel trades I mentioned before, good candidates for broken wing butterflies, bullish or bearish. But Rivian is now cracked below 28, cracked below these lows, and it looks destined for perhaps further downside. So a nice little potentially bear call spread on this, or even a out of the money broken wing butterfly. Qualcomm also got a little downgrade, but it's fine. It's resting. These are ones that came up in the news. HZMP. I typed the symbol wrong. Coupa software. It gapped up. So it gapped up on its news. Could be a nice little bull put spread right here on Coupa. Let's check the news again. Lots of news here. Yeah, they announced their earnings were good. Oh, agrees to be acquired. There you go. That's why it's dead. The stock isn't even moving. Its acquired price is right around 78.70 a share. So that's where the stock will remain while this buyout is in motion. You might be able to sell underneath. If there's any premium, I would look at 70. Let's just check. Usually the IV dries up when this happens. So let's look for 70 here. Yeah, you can't see, but that's what happens. You can sell a credit spread for a debit. No, thank you. I don't want to do that. Those are the ones. Those are the ones. Not a super huge day with opportunities. Let's wrap. I keep saying wrap, but let's actually wrap by seeing what the VIX has done this morning. Yeah, man. What? Weird. The VIX spiked. And what did the SPX do? It is up a little bit. All right. That is very telling. Something's up. Something is up. Why would the VIX spike? I told you why at the beginning. It spiked because option premium is being elevated because market makers are expecting there to be something happening this week. So perhaps there's some news out under, that you've heard that there's insider news being floated around. Maybe that's what's up. Maybe not. But the VIX is definitely spiked up for not because the SPX has dropped, which says something might be coming. Let's see. Andrew said the 77 on PDTD is at the 20-day exponential moving average. Okay, that's great. So support level. Larry said, would you use short-term spreads with these channels? Yes, absolutely. Absolutely. Yeah, I think that's it for today then. Any last questions or comments before we wrap our sniper call for this week? All right, welcome to the educational series. I know I spent quite a bit of time on Channel Finder, but these tools are really great for helping us find opportunities like Pinduoduo. All right, everybody, have an awesome day. Great to be with you. Thanks, Gerardo, and we'll see you soon. Pura vida.
Thanks,
Bye.
Mike. Thanks. Have a great day.